I'm Mike Alkin with the Stock Catalyst Report, and I'm lucky to be here today in Vancouver, Canada, in a gorgeous sunny day. And I'm here with the CEO of Uranium Energy Corp, Amir Adnani. Amir, good to see you.
Yeah, thanks, Michael. Finally, we connect.
Finally, we have been trying, we've spoken a lot on the phone, but it's our first time we're both together in Vancouver.
That's right.
And it's great. We just picked up coverage of your company and had UEC as the top uranium pick. So we're pretty excited to get to, fresh off of that, sit down and talk to you.
It's really great for us to get your interest and support,
Sure.
And I know for someone who's really looked at a lot of different sectors, I'm curious. You know, I found it very fascinating when you called me and said you were really interested to learn more about the uranium sector.
Yeah.
What got you interested? I mean, usually I'm the one who has to answer the questions, but here I'm going to ask you a question.
That's a great question. So 20 years as a hedge fund analyst, portfolio manager, a partner at some big funds. A lot of my time was spent in very deeply cyclical industries. And I find it's there where you find that gap between what the narrative is and what the real arithmetic says, the supply and demand, and the nuances. And I've experienced that the longer a bear market goes on, the more the narrative gets legs and it grows. And even those who are most knowledgeable about the industry, they tend to fall into the narrative trap. And those who may have been talking about why to own something, after a while you just get beaten up. And that's when we would typically come in and take a look at something. And that was uranium. Been familiar with it for a long time, but like you said, I've looked at a lot of different industries. And about a year ago, I started trying to understand the narrative. And what we do is try to take the narrative, take the bear case, and prove it right. And after doing that for a few months, we couldn't. And that's when I said, I think there's something here that we really need to dig down deep into. And you know, I think when you come at an industry with a fresh set of eyes, having familiarity with it, but not living it every day. When you look every day and the tape is red and it's beating you up every day, it's hard. After looking at the uranium space, really the last 9 months, we decided it was time to come out and tell the world that you got to start buying uranium stocks because the risk reward is asymmetrical. And as we drill down further, we looked around the world where we wanted to find companies, and that's where we found UEC. And I love the strategy you've put together. I love the fact that you're a producer, and as a producer, you had the ability to say, you know what, I'm not going to produce, because that's not an easy thing to do.
That was a very tough decision.
Very tough decision. So, but let me ask you this. So the uranium price is sitting here at 20 bucks a pound today. No producer on the planet, even Kazakhstan, makes money. Yet we don't see the stocks, we don't see the commodity, we don't see it moving up right now. What do you think the disconnect is between what the narrative is and where the reality of the situation is?
Well, first of all, it seems to me that there is no such a thing anymore as a long-term value investor. It seems like even large institutional investors want to see positive sentiment and momentum before they invest. And I say that without naming names, but just recently I was on the road marketing a bit, meeting new institutional investors, some of the largest ones in Europe, on the back of some news that we've had recently, an acquisition that we've made. So we wanted to get the news out. And I was both fascinated and excited by the fact that I noticed from meeting some of these largest funds in Europe that specialize in mining, that they own zero amount of stocks or exposure in the uranium sector.
That's stunning.
It really is. You're talking about multi-billion-dollar funds dedicated to mining. Zero uranium exposure. And when you kind of wonder and ask them, well why? And the answer is one that you would expect to get from a hedge fund generalist type that would basically just say, well, we're just waiting to see that uptick and the confirmation of an upward trend, and then we're going to pile in.
And yet they'll own consumer staples companies trading at 20 times earnings versus 15 times historical with no growth.
Or Snapchat at a 25 billion market cap.
It's stunning.
It is stunning. And you look at the combined market cap of all uranium stocks today.
$4 billion, right?
Well, maybe. Call it five, maybe, just in case. Call it 6, just in case we're missing some guys out there. And even that is what, 1/5 of Snapchat? Or just I don't want to pick on Snapchat. My kids love it. And that's the only thing it's good for, it seems. Kids are loving it. But look, the bottom line is that I think that when capital decides to come into this sector, it's going to be quite astonishing. I think it's going to be quite breathtaking.
Well, you saw that in the last cycle.
And I lived through that in the last cycle. When we started out in 2005, there were maybe 20 uranium companies in the world.
Right.
By 2007, there were over 600 uranium companies in the world. And just as a benchmark, I mean, today a pound of uranium in the ground will trade anywhere between $1 to $2 a pound in the ground.
Right.
In the last cycle, these things were trading at $12 to $15 a pound in the ground.
And the demand drivers were not nearly as good as they are now.
Well, that's what excites me today more than ever, and that, yes, I know it's painful, and I know it's been painful, and that this post-Fukushima recovery has taken much longer than what anyone anticipated.
Right.
I mean, anyone. I mean, we're talking about CEOs of the major uranium companies didn't anticipate the recovery to take this long. But the fundamentals are so much better, so much meatier today than they were in 2006 when we had the beginning of the last major bull market in uranium. In the last cycle in 2006, much of what we're seeing today in terms of the nuclear renaissance was like a buzz term, the nuclear renaissance, right? Today there are more reactors under construction than there were in 2006. There has been supply cutbacks that really tightens the market. There's a true globalization of nuclear power taking place with what China, India, South Korea, Russia are doing. And in the US, with the new administration and the emphasis they're placing on wanting to see a domestic uranium mining industry get developed, that's the opportunity I saw when I got in this business in 2005 as an entrepreneur back then with a fresh set of eyes that you applied a year ago. I applied that 12 years ago, and I thought, geez, how can you, I mean, it would be the same as if you said, hey, you could have a viable airline industry in the US but not have Boeing.
Absolutely.
You know, how could you have a viable nuclear industry, 20% of electricity generation, but no domestic production, no domestic technology, especially given the Westinghouse problems that they're having? You need to have these companies domestically to have a viable industry that's going to play a role, whether it's energy or electricity generation or healthcare or transportation. That's what you need.
You think about 50 million pounds the U.S. consumes in uranium, and it produces less than 3 million pounds.
It's remarkable.
And half of that, so they import 95%, half of which comes from Russia or Russia-influenced sources. So the energy security is at great risk. So one of the things that we saw was the Trump administration, the new administration, which will be more nuclear friendly, they signaled that coming in. And Rick Perry, who's from your home state, is now the Secretary of Energy. And just a few weeks ago, he had a secretarial determination, a kind of signal where they're thinking by reducing the amount of excess uranium sold into the market.
That's right.
And what was your view on that?
When Secretary Perry was first, when his name was first floated as a nominee for this post, we were thrilled, mainly because as a uranium company that's been based in Corpus Christi, that has been operating in the state of Texas for the last 12 years. For most of those 12 years, he was the governor of Texas. We would go and visit with his office and him about what we were doing as a company and our industry. And he understood it, and he believed in a diversified portfolio for energy development and electricity generation. I mean, the state of Texas today isn't just about oil and gas. It's got biggest generation of electricity from wind farms and wind turbines and uranium mining, and he was very supportive of our company, of our industry. We saw it firsthand. We got to know him firsthand. So we were thrilled to see him become the nominee because we understood he brought a very practical and a very hands-on approach. And we're seeing the benefits already.
Right away.
We're seeing it right away.
So what we're talking about is the U.S. was selling about 6 million pounds a year into the market from their reserves. And that was causing a couple of $3 worth of damage to the spot price, it's estimated, and he immediately said, we're going to cut back on half of that.
That's right.
So that's quite good. So what is it, I think about UEC, and what attracts me to it is the type of mining that you do, right? So you're an ISR miner. Why don't you share with viewers exactly what that is?
Well, when you look at the mining business, it's a capital-intensive business. And in most other commodities, gold, copper, silver, you name it. There are juniors that do the exploration work, and then there are majors that do the building and operations. And typically the story goes that if you're a junior, you hope at some point a major will take you out. The opportunity that we saw in the uranium business 12 years ago was the fact that there's 5 or 6 uranium producers in the world. That the opportunity was to become a member of that club, was to become a producer. And the one advantage in the uranium business is that there are enough uranium deposits that are amenable to a style of mining called in-situ recovery, or ISR. That's an alternative to open pit or underground mining.
Right. What they call conventional.
What they would call conventional mining. And using the in-situ recovery method, you substantially reduce the barrier to entry to go from being a junior and become a producer.
Right.
And so it's technology. It's a technology, what in-situ recovery is, that enables this low cost of capital to get into production.
Right.
And when you're in production, the lowest cost mines in the world today that are operating are in-situ recovery mines. They're in first quartile costs.
Right.
So our vision was that if we can become a player in developing and operating and producing from in-situ recovery amenable deposits,
Right.
especially on US soil,
Yep.
we hit two birds with one stone. We capture a market that is totally underserved,
Correct.
the US market,
Yep.
biggest uranium market in the world, in fact.
Right.
But we do it with the most cost-effective technology that is also environmentally friendly because it has such a small and minimal footprint compared to a big strip mining operation.
Right.
And this is what we have made a real focus on in terms of our team building, in terms of our historic databases that we've acquired, in terms of the grounds that we've acquired and projects we've developed. And South Texas has been our home in terms of the South Texas uranium belt, where this style of mineralization and these styles of deposits are that have been discovered and found to be available to in-situ recovery mining.
So you mentioned South Texas. So it's one thing to go out and buy some properties, but talk about the strategy that you're employing down there, that hub and spoke strategy, and why that's a benefit to shareholders.
Well, we wanted to take the technology and the low-cost advantage further. And the way we took it further in South Texas was by having a centralized processing plant, the hub, as part of the hub and spoke, that can service uranium that could be mined using the in-situ recovery method at various locations throughout this 200-mile long belt, a mineral belt in South Texas. And this would allow us to have synergies, operating synergies, lower the cost. You don't have to build a plant at every location.
Right.
South Texas is very well developed in terms of infrastructure, highways, roads, et cetera, that connects the various parts of that region. And so by implementing the hub and spoke, we were able to benefit from this centralized, fully built, fully permitted facility that we have at Hobson, and build our very first mine at a location called Palangana.
Right.
And since the fall in the uranium price, we've put the production there on hold because we don't want to deplete and waste our resource
let's talk about
at a low market.
Yeah. Talk about that real quickly.
Well,
Your decision, you were a producer,
Yeah.
and then you stopped producing.
It was a very tough decision. However, it was also both a necessary decision and very much inherent to our strategy. Our strategy from day one was to be 100% unhedged producer. Every other uranium producer on Earth has signed a contract that says to the utility, I'll sell you uranium at a fixed price and deliver. Today, a lot of those long-term contracts at a fixed price are not that much higher than the spot price that no one can make money at. And we saw this coming, and we just felt that, look, our investors want the full upside to the uranium price. Once we see that rise in the uranium price again, like we saw in 06 and 07 when the price got to $140 a pound, we want to capture every bit of that upside. We don't want to be locked in at $40 a pound, which is like the prevailing average long-term price right now. $40 a pound sounds really nice when the spot price is at 20, but you're going to be very frustrated when it starts to go back to its pre-Fukushima level of 70, or the incentive price for conventional mines to come online, which is 80, or the 10-year high being
So the strategy
140.
was batten down the hatches,
So
don't deplete resources.
Being unhedged, once we saw the uranium price go down, we said, let's cut back the production because we don't have big debt on our balance sheet, and we have the financial flexibility, and we're nimble to cut back the production, preserve our resources that have taken years to permit. These projects on US soil, the long lead item is permitting. It takes 4 to 6 years to permit a new ISR uranium project. So why destroy the value at the bottom of the cycle and just sell for the sake of saying you're in production and make a few utilities happy? Instead, let's just make sure that the long-term value is kept in the company for our shareholders. Cut our costs. We reduced our operating expenses by 70%. You make tough choices, and we did that. But we became one of the most nimble companies, financially speaking, in the uranium sector.
I was going to say, you didn't put your feet on the table and say, okay, let's wait. You were out acquiring assets at some very attractive prices.
We've been focused more on acquisition and development.
I mean, the prices have come down so dramatically. I think just a few weeks ago you announced the Reno Creek acquisition. up in the Powder River Basin,
Right.
which takes you a little bit outside of Texas into Wyoming. But I think you paid 80 cents for a pound.
That's right.
Materially less than what you're trading at per pound. So it would appear to be an accretive acquisition. Can you talk about why in the Powder River, and where you go from here with that?
Well, basically, if you're going to build a really, let's say, a substantial and complete
Right.
in situ recovery company in the United States,
Right.
you need to be in 2 locations, South Texas
Yeah.
and in Wyoming, especially the Powder River Basin of
Right.
Wyoming. These are the areas where there's proven geology that's amenable to the ISR method.
Right.
Home for us for the last 12 years in South Texas. We've covered that area extensively. We have a
Right.
very large portfolio of permitted, construction-ready projects, plus our infrastructure at Hubspoke. We were looking for the right opportunity to get into the Powder River Basin, and we found, in my opinion, a remarkable deal. And all the analysts that cover us have responded very
Yeah.
positively. The market has responded very
Right.
positively to the news. And that was basically to acquire what was the only fully permitted ISR uranium project that wasn't already in a public company, that had been developed over the last 6 years by a private equity group.
Right.
$60 million, 60, had been invested in this project. So a project that really had fully funded and attention dedicated to it for 6 years. And we were able to convince this private equity group to basically take shares in our company. So it was an all-stock acquisition for less than $20 million in value. You compare that to the historic hard dollars spent on the project, shows you the enormous vote of confidence this group is putting in us and the
Very much
upside
so.
they see in our equity. And so it does a number of things. We now have, along with basically Pacific Road Capital Management, which is the private equity group that we are acquiring this asset from, they become a substantial shareholder, along with JP Morgan, BlackRock, wealthiest investor and individual in Asia and Hong Kong, Li Ka-shing, Sprott Asset Management. So we demonstrate a holders list along with insiders ourselves that you would expect to see in a multi-billion-dollar company. You have in a junior uranium company, along with the uranium ETF that has become a major shareholder. But you also now have a portfolio of fully permitted ISR, that means low cost, low risk, amenable uranium deposits in Texas and Wyoming. Our projects in Texas are production ready. This new project, Reno Creek in Wyoming, is construction ready and fully permitted. Remember, it takes 6 years to permit this project, it took them 6 years to permit in Wyoming. So even if you went tomorrow and wrote a check for $60 million, you couldn't just have a fully permitted ISR project. So I think it puts us in a position where we now have a leading portfolio of ISR projects in the United States. And these are the types of ways that we wanted to create value at the bottom of the cycle.
So let's talk about this bottom of the cycle, waiting for production. What incents you, what price incents you to go back into production?
Well, look, we want to see a price north of $40 per pound to get going again with our Texas business. It's more advanced and it's more of an area that we think can work with that uranium price. At levels north of 45 and closer to $50 per pound, we now have this great next leg in the story with the Reno Creek project in Wyoming. Our total team, in terms of our in-situ recovery team of geologists and engineers and permitting staff, have demonstrated that we understand this method. We have the technical capability to advance these in-situ recovery projects in the U.S. And so that's the plan in terms of the price points we want to see. The team is in place, the shareholders and investors are in place.
And what's it cost you to get running again?
Well, you know, the good thing is that as you're aware, in January, we were able to complete a financing that was meant to give us a war chest to be able to restart our projects in Texas. But even if the uranium price takes a bit longer than we expect to recover, it gives us the staying power and a balance sheet to move on. We raised $27 million this past January. That really gives us a very strong and meaningful balance sheet to move forward with, to advance our Texas projects. We're drilling at our Burke Hollow project right now. I would say we have one of the strongest balance sheets right now amongst junior uranium companies in the world, and probably the largest base of fully permitted ISR amenable resource projects on U.S. soil.
And then the last question is, once you get going on that, how much can you produce? And because I want to give the viewers a sense of what kind of cash it can generate. How big?
Well, look, we have our Our Hobson plant in South Texas has a 2 million pound per year physical capacity. This Reno Creek project in Wyoming was fully permitted for 2 million pounds per year. These have to be ramped up and developed, right. But ultimately gives you a sense that with those two projects or those two areas, right. We have the potential to become the largest uranium producer in the United States and a meaningful size producer in the world.
Great, and that's why we recommend the stock. Thanks.
Thank you,
Good
Michael.
seeing you.
Yeah, pleasure.
Thanks.